All right, so now welcome to the Pit Report, and as many of us predicted, VIX, we're now at 2,100 in the S&P. VIX is now off. The VIX futures are getting smoked. Look at VIX Feb. Remember this morning, one of the trades that we really eyed ourselves on was that we thought that the February 16th, the February futures were probably a bit too high, and that this spread was a little too high. I still feel that way. Now I've made a couple of bucks here, but I think there's probably more give. I mean, if I look, look at the size of this spread still. I mean, it's nickel at a dime, 10,000, and it's only 70 cents out of the money. All right. Just to kind of show, another trade we looked at was to buy the 17, 16, 15 butterfly. And we were looking at 80 versus a quarter versus a nickel. Right? So basically we're looking, or 30, I'm sorry. We were looking at I believe, a quarter for this spread. And now it's, let's see, 10 cents versus, let's call it 37 and a half. It's 35. It could be sold back at about 40 cents. So it's up 15 cents. Meanwhile, a straight-up purchase of the 16 puts is essentially, it's up $8. Not exactly the most exciting P&L in history. So, that just kind of goes to show you that, things can look like a complete layup with VIX, but maybe not always be as easy as they seem. All right? And, I think that's a big differentiator. All right? Now, other things that are moving around, as you can see, Apple continues to just push higher and higher. And thankfully, we own those extra calls, and I'll talk about that in a little bit. I'll talk about the strategy letter here in a touch, but the market continues to be kind of this gradual climb higher. One interesting trade is TLT, where things are really starting to fall apart here a little bit. The question is where do they stop? And that could be part of what launches things tomorrow is, well, how much are things going to be moving around tomorrow? We've got FOMC minutes. That could be really interesting in terms of what drives us and what causes us to move. All right. Yeah, the Nasdaq's kind of the weak. The Nasdaq's probably the weakest of the major indexes. Meanwhile, we're probably getting the most strength out of the Russell, although really nothing's really moving very much in the end, right? You've got, everything up a little bit, all right? Now, I know we talk about VIX a lot, but I want to explain why I was looking at VIX as something that seems so out of whack. And it really kind of has to do with, how the term and the length of time can last. And March is screwed up still too. All right. So I'm going to take you back to kind of earlier in the year. So we'll go to, or early, kind of mid last year. So let's go to like September. And, on September 15th, you have one date expiration. All right. And where was the VIX itself trading? No, because that's February. So on September 15th, you know, we had the VIX close around $14.12. And you can see the cash close $14.40. All right. So what's the spread between the cash and the future the day before settlement? You know, about 35 cents, a little less. Or no, about 25 cents, excuse me. A little more, about 28 cents. Now, this morning, and actually still now, look at the spread here. It's gone. It was at one point 55 cents, and it's now 45 cents. So next stop is probably 25 cents. All right? Next stop is probably 25 cents. So if the next stop is 25 cents, and even if the VIX sits here, where does that put the Feb future? How much more is it going to lose? Nobody? Bueller, 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 Bueller. The president called this what? The president called this what? Voodoo economics. Well, I mean, all right, so think about it. Thank you, and thank you for acknowledging that. So last month, the spread was 28 cents. It's currently 41 cents. All right, so if the VIX cash stays 1565 and this thing tightens up, that's going to push, all right, Feb probably another dime lower. All right, so that would put Feb down to 1595 into settlement. All right, so if the Fed future drops, take a look at the delta of this option. So if the Fed future falls another nickel, all right, or another dime, how much will my Feb 16 puts make? Yeah, they'll make about 5 cents. So, you know, I've got a trade on where, you know, I'm going to make money unless there's a big pop in VIX, or you know, because I'm going to be able to sell at 35 cents or at worst 30 and scratch it. More likely at you know, 35. And if VIX sits here, I'll make a nickel. But what if VIX falls? What if VIX falls and that spread tightens at the same time? What's going to happen to my put? So we've got the VIX falling and the spread tightening at the same time. So if let's say the VIX settles 1550. All right, so another 13 cents. And we expect that spread to tighten to 30 cents. That would mean that really my VIX Feb is going to drop 30 more cents. How much do I make then? At least $15. All right, so if I've got 15 bucks, so I've got a trade where I can scratch or make a nick or make $5. I've got a trade where if the underlying just sits here, I'll make an additional $5. And I've got a trade where if the underlying falls, I'll make an extra $15, maybe $20. So that is why even here, if I could buy 35 cents, I probably would. Everyone kind of get my logic on why I thought it was a good day trade? There you have it. All right. Now, the other trade, we spent some time looking around at a few things, but the other trade, the one thing you guys spent some time looking at was AXP. And, they took away a lot of money last week because of the Costco deal. Well, they've already priced out AXP, which means maybe it's an interesting put sale, but I think things could get worse for them. They could lose a lot of money. And this is a stock worth $80 billion. All right. It's a stock worth $80 billion. Yeah, I mean, Amex is having problems. Yeah. I mean, I think as a long-term trade, this is looking like a very, very bad potential short. And the big thing I was talking about is that there's this force of habit, right? I mean, how many people in this room have multiple credit cards? I know I do. I know I do. Yeah. I won't after Costco gets rid of my Amex. Yeah. So, I'm not telling. Anyway, I know I do. And what makes me use one or the other? Honestly. I mean, there is the benefits. If you've got one that has particularly good benefits versus another, maybe that makes a difference. I personally use my Amex because I get a really good cash back deal, right? But the real answer is that, in addition, it's really just force of habit. I just go for my, I'm paying at a restaurant and I get triple points on MasterCard and I get something else on Amex. I get a 5% cash back on Amex or something like that. What makes me use one versus the other? Really nothing. The deal's about the same. Yeah, I mean, well, but when the reward's about the same, which really any creditworthy person can basically get the same deal from every credit card. Yeah, whichever one is top of the stack and whichever one you use the most. All right, now, I go to Costco a lot. I use it for gas. I go there for all of my fill-ups. All right, and I go there for when I'm buying wine. And if I'm buying, like, seafood or stuff like that, and for pharmacy, right? Their pharmacy is unbelievably cheap. So I'm there enough that it could actually affect my habits. So, yeah. So, you know what? They have some for some of their whites, like you can't get Kim Crawford for $11.99 anywhere else. No, not like the nice stuff. You cannot get Kim Crawford for $11.99 anywhere else in the world. And then you can't get, I mean, even Santa Margarita for I think $15.99 is cheap if you like Pinot Grigio. You know, my dad's a big wine person, and he'll buy his like everyday wine there. You know, he doesn't buy like the night. Nobody buys their nice stuff there. But you know, like they're not going to carry anything like, you know, Dreaming Tree or, you know, some of the other really tasty wines that I like. But they have a good selection of mediocre wines, you know, for if you want to have a glass on a Tuesday. Or a glass or four. A glass or a bottle. And all right, well that's good to know. So the Mad Dog 2020. Yeah, no, I like my wine fermented. That's how I prefer it. By the way, you can tell you're at the wrong wine site when they allow you to search for fermented wine. I'm not a big $2 Chuck guy. And it's now $3, unfortunately. Anyway, so the point is, it's habit changing. So the rumor is that MasterCard is going to get the deal. And that is going to be extremely bullish, the name. All right. And so a trade I kind of like as a long-term play. And we can kind of see where things start to kind of pop. I don't mind MasterCard. It's not bad. So I was messing around. Yeah, they're going to send you a new one just to get at Costco. And I mean, these are already up, but you know, the April, what about like the April, July 95 call spread in MasterCard? I mean, what do you get out of March? I would do March if I could get anything. 20 cents? I'll do that. That's 10%. Gives me some flexibility. So I'm paying $1.80 to get long the July 95 calls, basically. So, you know, the other option would be do the 90s. And I could do the March-April 90s. And that's going to be less than 70. That's going to be 70 cents. And then maybe to keep this thing delta neutral, you know. So what do you think would be? So if I'm bullish MasterCard, bearish Amex, but I want to protect myself against industry risk, how do you think I could use those two outlooks against each other? What do you think? You know, what is Andrew's favorite trade to set up for a bull play? Yeah, almost a pairs trade. You know, what is the classic Giovinazzi bull time spread? What's the other thing he always throws into a bull time spread? You guys remember? He buys a put. So what if I did the March, you know, what if I did the March, and we could do like, you know, Andrew's going to say, so we would do 7. That way we're only spending 500 bucks. We'll do 8. All right, so we do 8 of the 8 lot, which buys us, is only long 34 deltas. I do. It only gets us long 34 delta. All right. So if I do that, for 73 bucks, and then what if I go in an AXP, I go to April, and I just buy one put. I buy like a 75 put. As a spread. What do you think? What do we think? What do we think of that idea? It's the Giovinazzi special, just with a little Seabass twist. Yeah. The nice thing is this one might not even be a waste. I think it could win twice, don't you? Because I think when that actual deal gets announced, AXP is going to drop more. Because there's probably some people holding out hope that AXP is going to, is going to come back in. All right. Well, there you have the strategy letter trades. Now, why don't we talk about the strategy letter? It's the strategy letter, and I am awesome. That's it. My new twist on it. What do you think? All right, so let's start with our Apple trade. Remember, we thought Apple was going to kind of have trouble breaking through 120, so we wanted to set something up bullish, and we set up kind of a ratio spread where we were long 5 of the 117s, short 12 of the 120s, and long 7 of the 124s. Well, when Apple broke out, we went in and bought 10 of the Feb 124s. Or we bought 3 more of the Feb 124s, excuse me. Well, it continues to rally. If you look at Apple. I mean, it's now up to 127, a little more follow-through, and even the initial trade would have made money. All the extra stuff is kind of icing on the cake. You know? All right. So I think it could get there. All right. And so it's kind of just kind of biding the time. I'm still long that BAC garbage put and then CMG. You know, if it wants to tank, by all means, please tank. So now it's just about waiting on those March 6 1/4s, which, still are in play. Recall initially the trade that we put on was we did a Feb 650 March 6 1/4 back ratio. We paid about $10 on it. It's lost. That part has lost 400, but we then adjusted with a butterfly that has made back a little over 100. So the trade is still around about $280. A quick drop, and we will be golden on this one. All right. Delta Airlines. All right. Now, recall, this was kind of a play on us believing that Delta had kind of found a floor unless oil prices really took off. All right, if I pull up a chart, and I show you just kind of the pricing, I am. Is that okay? Why? Oh, do you like the approach I'm taking? All right. Yeah. Oh, well, thank you. So now, at onset, the trade that we were looking to do was, basically we kind of said, okay, I don't think it's going to go much below 43. I really don't. And if it does, really the absolute floor is right around, we thought maybe 40. All right. So the trade we set up was something that we could do for a credit. That's in its Feb, and it should be March, so I got to adjust that. But, that's neither here nor there. So what we set up was the March, not the Feb, the March 43, 41, 35 bear broken wing butterfly, and the idea was that we thought, well, it's either going to kind of sit here or rally, so I'll either keep the credit or it'll kind of meander a little lower and I will potentially hit it out of the park. And, that's great. And that's really what I'm looking for. As you might say, as you two might say, I still haven't found what I'm looking for. All right, does that make sense? So basically the premise is either a slow move lower from here with oil, or kind of volatility collapsing and the underlying rallying a touch, and I'll be able to flip this broken wing fly back out. All right, now Ford, it's a penny. It's it was kind of a wheel trade, and it expires this week, and maybe the one thing we would have done a little differently on that is actually taken delivery, and since it is the same hit to our margin, and then sold covered calls rather than rolling down and lower. That's probably the way I would have done things a little differently. But Feb was one where we thought we could enter a wheel trade. All right, now, Facebook, it is the classic bull-bear play that Andrew likes to do, where we're along the March-April 80 call spread and along the Feb 72.5 put. All right, now, we did get a little pop in volatility. All right, and so, or not the Feb, we're along the April 72.5 put. So we got a nice little pop in volatility. And the March 72.5s are 96 cents. All right, versus the 80s, they're about 75. So I think if I want to keep doing this trade, I think we have to adjust this, You know, I'm not. I want to make sure I check his notes to make sure there's nothing. All right, I don't see. Just seeing. All right. Oh yeah, there's only 2 puts instead of 5. So I still might sell these puts at 90. You know, I still might sell those puts at 95. I don't think that's a terrible sale. You know, I mean, you seem. You know, that's something I'll discuss with Andrew. But look for the strategy letter to have some changes in format, so make it much more readable. And if you've got suggestions on things that would make it more readable, please send them to me today, because I am going to finalize a new format by the end of the week. We've already slightly changed the afternoon format. I think you might have noticed that. If you've got any other ideas, please send along. Alibaba. Oh, I'm sorry, wrong. Alibaba's closed. Facebook. GLD, you know, that's just garbage time. You know, Andrew had thought that gold was going to keep going. Instead, it just turned around. So that trade is basically at max loss. Intel. We have on the March 6th. All right, the March 6th, 33, 32.5, 29, broken wing. And the idea is, you know, again, we thought Intel was either kind of bottoming or was going to maybe ease lower without going a lot higher. All right. PBR was shut down. I'm not sure why it's not showing up as a close. Maybe I need to input that one. That's not there. TLT, you know, yeah, I shut down PBR on Friday. Yeah, I mean, so TLT with this breakout, there should have already been a couple of put purchases. All right. So now that it's here, we're going to buy the March 130, 125 put spread, 106, and that'll be kind of an adjustment that we add in as a way to kind of continue to get short and get short kind of near term. All right. UVXY, that 24 put against that bull VXX play. You know, I'm expecting UVXY to continue itself lower. But, you know, it's on March 6th, so it's got a couple of weeks. That one could end up deeply in the money again. His March 6th VXX trade is, you know, it's all about how much garbage time we can make up back on that. And then WBA, which is Walgreens. You recall this was the iBit liked Walgreens Boots Alliance since it was just called Walgreens. And I said, you know, I think this is one that's going to keep going. We're currently long the April 77.5s against the Feb 27 79s, which are 60 cents. I'm going to be looking at some point to cover those. So that's kind of what's in the strategy letter now. All right. Again, please email me, mark@optionpit.com, how you would want us to read the strategy letter that would make it easier for you to read. You know, the goal is in the morning we want it to be concise and for you to know what the adjustments, potential adjustments are for the day. In the afternoon, new trades and any adjustments we did during the trading day. All right. Great. On that note, I think that is it for now. I'll be back. Okay.